All right, what is going on, everyone? Happy Tuesday. Let's go ahead and dive into my Elliott Wave analysis on Bitcoin. Let's dive into the bear case and the bull case and look at a few scenarios that we have on the table. Obviously, there's a lot of stuff going on. Alts are flying. Everyone's wondering what's the next big trade. What's happening on the charts here. We have FOMC tomorrow, so that's something to be aware of. And overall, let's just go ahead and dive in on the Elliott Wave analysis here. And from a 4-hour time frame, we have the clear 1, 2, 3, 4, 5 case. If we are looking at a bear case, bears want to see a larger WXY form here. You have a 1, 2, 3 very extensive move here and a very comprehensive move here. This is a WXY, which is a double 3, 1, 2, 3. So you have your doubles and you have your threes forming on the charts here. Now, from an overall 3, 3, 3, that perspective that we were looking at was not valid, and we can be looking at a 3, 3, 5. Why is this the 3, 3, 5? Well, we can just look at a simple 1, 2, 3, 1, 2, 3, and then we have 5 waves from the 3. So 1, 2, 3, 4, 5 in a overall diagonal. So that could be a 3, 3, 5 if this is what we were seeing. Now, if we go ahead and start pairing in the Fibonacci levels, so if we look at the overall high of wave 2, so we take a fib pull from the high of wave 2 down to the wave 3, and we take a full fib here. We can look at, okay, we SFP'd. Let's just start here. We SFP'd at the W at the 382. We came down. We did a 618 back test from that high, right? So you can see the 618 here and here, which is where we took a long, and I have personally still held that long here, and we have traded up ever since. Now, yesterday we did an SFP of the 0.5 level, and we saw a bit of a rejection here. So bears want to continue to see rejections around the 0.5 because the 0.5 is where wave fours like to wave fours, that's where they like to retrace, and that's where they like to reject from. It's not uncommon that we see something like this. Now, where the line in the sand is for this wave four, because we've been talking about it for so long, and is the count actually valid? I think that question's around the corner here. So really, you want to see this rejection in this zone here. Now, if we start to see a move up like this, and we start to form constructive behavior past the 618 and 66, that's in trouble, and the wave 4 is obviously an invalid count, because if we start moving above this level and we start reclaiming these levels, well, wave 4 obviously doesn't extend that far. It can always extend to 66 and 618, especially in Bitcoin, because of its volatility. Wave 4s just cannot simply retrace above the wave 1, starting or the end wave. And since this was a bit of a shorter wave here, and a bit of an irregular correction here, this was an ABC on the wave 2 instead of an ABC, right? This is a very impulsive wave here, and this could be and this looks corrective behavior to me, and we can get into how we could actually form this into an impulsive wave here. But bears want to see this move, and you want to see, either this is the terminal wave here, or you could get another high sweep, and then maybe have this, or you can just high sweep one more time and come down and then start to form your impulsive waves for your local count to the 4 to the 5. Now, from a bull perspective, what do bulls want to see? Well, bulls, let's get rid of this chart here. Bulls want to see that this is the terminal wave 5 here. And then you have a motive sequence into this structure. So you could obviously say that this is on lower time frames, 1, 2, 3, 4, 5, and then you have a larger ABC, and then you have your bottom of wave 2 here. And then from in that zone, you could start to look at things as an irregular ABC flat, and then you're building the third wave into the fourth, into the fifth for your 1, 2, 3 overall, higher wave count. So bulls, if this is what you're seeing, you would like to see that these are protected lows and that we are starting to form, obviously higher high, higher low, higher high, higher low, higher high, higher low, and you start to see that wave count. That's a motive sequence structure, and you want to see that start to play out. And if this is truly a wave 2 bottom and you're forming this is a 3 of a 3 here, well, that's going to be a bit of a higher volume move here. Now, I don't necessarily. Wave 3s have to have the highest volume of every structure, and I don't really see that here. Yeah, I've seen. To me, this count isn't my favorite, and I don't think it's that likely. However, I'm not going to sit here with a magic crystal ball and say that this is the right count. Elliott Wave helps us look at the market in every single side of the coin, every different perspective that you can look at, right? So if you have 1, 2, and you have a 3 here, you'd want to see this volume actually start to pick up, right? And that would be your largest volume trade or volume session. But what I'm actually seeing here, and this is actually better for the bulls. So if we go back to the WXY, I mean, you don't have a crystal. We're kind of rotating in this structure here. So you have, you know, something like this that you could be looking at, like more of a diagonal, right? And if you look at this is price rising, and this is price declining. You know, you have a lot of declining volume here with price rising, and that's kind of the same thing that we saw over here as well. I mean, you have a bit of a diagonal rising wedge, as people like to say. You have a bit of this structure happening. Price was rising up, but you kind of started to see price declining. You never started to see high spiking volume, right? Nothing like this over here, right? So overall, this is a bit of a tricky situation to be in because you have two conflicting counts, and there will always be two conflicting counts, but you don't have a true narrative right now. And for me personally, you know, yeah, I've had some good swings in this range, you know, I shorted the 3 drives pattern here. I longed down here, shorted here, and I didn't catch long here, but I still kept my long here, and I had my spot trades open here. So overall, whether this is a WXY wave 4 or we're forming a new impulsive, you know, kind of motive sequence, I'm really happy to say that I'm going to try to take risk here, whether that's at the 618 or the 0.5. And my risk is going to be very structured, you know. I'm going to have a 2% setup likely, and I'm not going to be trying to swing for the hills, right? Like I'm not putting 10% on a short swing here. I'm saying, okay, I have exposure here and here. I don't have short exposure right now, and I would love to look for, you know, obviously rejections around this zone here because that would fit the WXY profile. Now, I have to be cautious because obviously we could be in the 1, 2, 3. And then, you know, obviously if you're going to try to short a 3, no one likes, you're just going to get wrecked because 3s are very impulsive, and, you know, you're just going to keep having impulsive movement down. So overall, be careful with what you're playing with right here. You know, if you've gotten chopped up in this zone and you are kind of upset at your trading, I think honestly now would be the perfect way to just kind of walk away from the charts, because what's going to happen here is, you know, one of two things. I mean, obviously it could do this too. You know, it could do whatever it wants, but from a resolution perspective on an Elliott wave count, you have a bit of a bias unfolding, and that narrative will reveal itself here soon. You have the FOMC tomorrow, so obviously you're going to stall. I don't like to trade FOMC, so I might not even take a short trade, even if we do have a move down. And that's totally fine with me too, because if, you know, we somehow reject, and this is the top here, and we just start to form, you know, our motive sequence down, well, I'll just try to look for these, you know, higher level plays and capture that swing move down. I personally, you know, I would love to see the wave 5 target hit, and I would love to see that 1, 2, 3, 4, 5. Because we sweep these lows, that is, I mean, that becomes a very clear count for me, and that gives me a very big understanding of all the liquidity that's built here has been taken, and then we're taking this down here, we're taking the confluence down there. That's great. I'll settle into a low leverage short and let that puppy ride. Now, overall, when we look into where we're at now, we have some things on the charts. We're above the fixed range volume profile in this overall range. So we can go ahead and get rid of that. We have about let's see here, a 2-3 day fixed range volume profile that we actually rejected at the value area low yesterday and formed that rejection zone. Came back down and SFP'd the 0.5, right? So if we look at two things, one, the 382 we got rejected here, rejected at the 0.5, but if we continue to come up, then we look at the 618 and the 66 as a last resort for the bears. Because if we continue to come up and we form some sort of price movement, then we look higher. That's constructive price behavior, and then we look higher for the short term, right? Now, what do we have here locally? Well, you can see that we had a rejection here, and I'll show you the order flow of what happened here. But overall, I mean, you have your 0.5 here, have your daily open rejected once, working on this. You could say that, oh, maybe this is a, you know, wave 4 high, and we're starting to look for local counts into the first wave of the 5th wave here. So we could say maybe this was a wave 1. That was a little bit impulsive behavior. this could be the A, B, C, and then this is the 2, right? This is your 1. And then you would look for some sort of, move to the weekly open. And I personally love that the weekly opens right here, because you have a pretty clear idea as if we start to lose the weekly open, we start, again, let's look at the daily real quick. We have an interesting daily right here too. For the last, look at this, 1, 2, 3, 4, 5, 6, 7, 8 days, green consecutive candles. The momentum is closing above the daily high and continuing that move up and closing green candles. This is the first red candle in a few days. Tapped the obviously the 97K anchored VWAP, right? Especially on the daily here. So if we come into this and say, well, bears would love to see this as a wave 4 rejection here. This could be the wave 4, working on the internal wave 1, right? So that'd be your wave like 1 here, and you want to look for a 2, and then you see that big impulse of 3 to take out all of these lows right here, and you have the 4 to the 5. So me personally, in the local zone here, I'm going to be looking kind of carefully of like what we're doing here. How are we forming bias right here? What is order flow doing? We had a nice run up here. Are we going to be putting in a 618 rejection here? For me, locally right here, again, that would be an ABC wave 2, or simply a 618 backtest, because you have nice little confluence right here. You have the 0.5, your golden pocket, plus your daily open. So if we see some sort of move up in here and we just reject and we never kind of come back up and we start doing something like that, oh, that's a great short trade. I'll be looking for the SFP of the daily open always, especially after losing it, especially with the 0.5 right here. And then you have the 97K anchored VWAP as well. So in terms of a local setup, I mean, you would really just kind of be looking for the SFP of the daily. And you can play that really one of two ways. You have, and how much is this here? 1.5%, that's not bad at all. Obviously, you'd want to structure this into a larger swing setup. And you have your fixed range profile of the overall range here, so that you'd want to kind of at least target that down there, so it becomes at least a 3-to-1. So you have an idea of, okay, I could just place it above the highs here and have a simple invalidation and just walk away from your trade and not stress about it. And that's, again, if you kind of come up into this and you start losing, you try to look for that entry trigger of the SFP. Or, you have your entry of the SFP and it comes down and you start to see a little bit of rejection. You just place your SFP of the highs and you give yourself a better. All of a sudden, you're at a 7-to-1. So you can play that of one of two ways. And obviously, if we start trending down and we start seeing more weakness in the charts, well, you just keep kind of trending down this swing and turn it into a intraday swing, more of into a medium-term swing. So that's kind of what I'm really looking at here locally from a swing perspective. I'm not looking at longs. If you are looking at longs, you are going to want to be kind of seeing and longing these pullbacks here. But with FOMC tomorrow, with us having a major rise, I'm not looking for longs up here. I've already had my longs. To be looking at longs was down here. We short the rises, we long the dips, right? So overall, my key takeaway for this is be very patient, no matter what side you're on. If you're looking for shorts, be patient, size accordingly. If you're looking for longs, I would also be patient, especially with FOMC. I mean, I just don't think that this is the week to be risk on. Yeah, I'm going to be taking risk, but as I explained earlier, I'm sitting in my longs here and my spots here. And, obviously I want to be hedging those two with a short trade, but I'm going to be doing it with very low exposure here. So overall, I hope that this video gives you a bit of a perspective change on how you're looking at things, whether it's you're not into Elliott Wave or you're not into auction market theory, or you're kind of more into lower time frames, kind of how you can pivot into the higher time frames. And always happy trading, guys.